about some of the pros and cons of walking away from a property or selling your property as a short sale if you're in a situation where you just pretty much made that decision that it's time for you to walk away. The first thing is the credit. A lot of people have a hard time, and they should, because your credit is a really important thing in especially in the United States. I mean, everything is run pretty much on credit for the most part, but a lot of people seem to think that, you know, if they sell their property a short sale, or they have to let the property go because they can no longer make those payments, and they decided not to do a short sale, their credit's going to be damaged forever, and that's really not true. The way credit works is credit works via credit scores. It's no longer back in the old days. They used to take a look at your individual accounts and make a determination of whether they can lend you on a property or not, and nowadays they still look at that, but the most important part of your credit is your actual credit score. So if you sell your property as a short sale, after 2 to 3 years, you'll be able to buy another house again. You definitely will. People say that you won't. You will, because I've actually seen people who sold their property 2 or 3 years ago as a short sale now entering into contract kind of purchase of a new property, $200,000 or $300,000 less than what they owed when they sold the other property. It was in the same exact neighborhood. So you can, in fact, buy a home 2 to 3 years more or less after a short sale. If you do a foreclosure and completely let the property go, it may be a little bit longer, not too much longer, but I guess my point I'm making is, you know, people think that I'm never going to be able to buy another house again, and that's just not true. You will be able to buy another house again. So this again is pros and cons, and you will have to wait 2 or 3 years, but I mean, is it the end of the world to wait 2 or 3 years? There's a lot of people who 2 or 3 years ago started getting into financial difficulty with their property, and here they are today still battling it out. Had they just made a decision and moved on and sold that property for the $300,000 or $400,000 less than what is owed on it and walked away and were able to buy another house, today they'd be buying another house at today's prices. So your credit score will go up after 1 year. Your credit score will go up. After 2 years, your credit score will be pretty close to what it was before. In many cases, as long as you maintain good credit, a good credit standing with the rest of your credit cards, your car payments, and so forth. Now, I'm going to dissect a little bit about how credit works in terms of the hit that you will take in your credit score. I want you to know that I actually was invited by FDIC to a meeting in Southern California to meet with a lot of various different lenders and government agencies, and I brought this particular scenario to some of the members of the credit agencies, and I said basically this, and I asked them, hey, what do you think? This is what I'm telling my clients. Okay, let's consider 1 to 10. Okay, 1 being the most amazing credit score you could possibly have. Okay, 10 being the worst possible credit score you can have. A 10 would be like a bankruptcy. A 1 would be spectacular credit. An 8 to a 9, more or less, is going to be a foreclosure. A 3 to a 4, maybe even a 5 will be a short sale. And every single month that you miss a payment on a short sale, the 3 becomes a 4, 4 becomes a 5, and so forth. But you will take less of a hit on your credit score most of the time when you do a short sale versus doing a foreclosure, letting the property go into foreclosure. So again, part of walking away from your home doesn't necessarily have to be walking away completely and just giving over the keys to the lenders. There's other ways to walk away from your property without taking that much of a credit hit. So credit definitely is important. You want to make sure that you analyze all aspects of your walking away particular decision that you're going to make, and make sure that it is the right one for you. Here's one that really cracks me up, and I say that because, you know, a lot of people have an issue with, should I let my home go? Should I walk away from my mortgage by doing a short sale or walking away? You know, I shouldn't, because the lenders are telling me that I shouldn't walk away from my mortgage because I have a moral responsibility to my lenders. And I got to tell you, I've been in this business for a long time, and I've seen it all, the good, the bad, and the ugly, especially the past 2 or 3 years. Since this mortgage crisis hit, I have never seen such lack of ethics and lack of integrity as I have seen from the lending industry. So I think that the people who are least qualified to talk to you and guide you towards making moral decisions is the lending industry. You should know that Morgan Stanley, for example, they walked away from about 5 particular properties in the San Francisco area. Why did they walk away? Because they had loans on those properties, had notes on those properties or leases They decided to walk away because it no longer made sense for them to keep those properties. These are Morgan Stanley. These are investors. These are people who probably hold your notes on your property. So they're telling you that you shouldn't do what they do every single day. Lenders do it every single day. Lenders walk away from transactions. Lenders walk away from deals that just don't make sense to them anymore. Why? Because if they were to keep doing it and staying into the particular property investment for moral reasons, they're going to lose their assets, okay, to put it mildly. Hey, here's another one for you. A builder walked away, I believe in New York, from a $3 billion project. $3 billion project. They walked away from that project. Why? Because it didn't make sense for them to keep that project, because they were losing millions and they were going to lose billions of dollars in that particular project. So don't let lenders tell you, hey, you shouldn't walk away. You should stay in that property and continue to make those payments because you made a deal with us. You want to know what the deal is that you made with the lenders? I'm going to tell you what the deal is that you made with the lenders. The deal that you made with the lenders is this. Look, Mr. and Mrs. Lender, I'm going to pay my mortgage every single month. However, if I do not pay my mortgage every single month, you have the right to take the property back from me. There's nowhere in there that you're saying, I'm going to not pay my mortgage and I'm never going to give my property back to you. That wasn't the deal. The deal was, I'm going to make my mortgage payment, and if I don't make my mortgage payment, you can foreclose on the property, or I can hand you over the keys as like a deed in lieu of foreclosure. There's various different ways to do that. But that's the deal that you made with the lenders. So get it out of your head. Get it out of your head that the lending institution, because they're telling you that you should continue with the promise that you made. Hey, what about the promise that they made? You know that they've gotten over $700 billion. $700 billion. They've gotten more than that to bail them out, to help you, a homeowner, get out of the bad loans that you're in, to help this foreclosure crisis. You want to know what they did? Very little. They took the money, they've remodeled their offices, they've done other things with the funds. In fact, I've even read where some lenders have bought like private suites at sporting events. These are your tax dollars. Where do you think they're getting this money from? From you. This money was given to them so that they can help you, and they haven't done so. Okay, so these are things that you really need to know before you start trying to help them. Because are they trying to help you? Absolutely not. I'm going to tell you something, and this is a fact. If a lender had an opportunity to kick you out of your home tomorrow with your whole entire family and your puppies and your goldfish and everything, if they had the opportunity to kick you out of your home tomorrow legally, and by doing so they would make a profit, do you think they would do it? Absolutely they would. Because it's all about dollars and cents to them. That's how you should approach it. It should be all about dollars and cents to you. Now, here's another dilemma that a lot of people face, and that's I say, well, gosh, I'm going to hurt my neighborhood, and my neighbors are going to be upset of me if I, let the property go, or if I sell the property as a short sale. Well, first of all, if you do let your property go as a foreclosure, meaning you just completely walk away, you don't do anything, you let the bank take it back, it's probably going to hurt the value of your neighborhood. Not a whole lot, but it will hurt the value of your neighborhood. But what a lot of neighbors and a lot of homeowners seem to forget is the fact that a lot of the home values that went up so drastically high, I'm talking 20, 25, 30% a year in certain situations. The reason why these property values went up so high is because so many people were able to buy a home. A home became like a gold rush. Everybody went out to buy homes. Therefore, increasing the demand for the actual supply that existed. There weren't enough homes for the people who wanted to buy them. That's exactly what drove the prices up. So if there is an individual in your neighborhood who's upset because you're having to sell your property as your short sale, or you're having to let your property go, they shouldn't be that upset, because part of the reason why their property went up from $300,000 to $600,000 is because a lot of people like you and other people were running in to buy properties in their neighborhood, which actually shot up their value. So it's kind of like an investment. I like to think about it as an investment. For example, let's say you have a lot of stocks. You buy $100,000 worth of stocks, and then your buddy buys $100,000 worth of stocks. And all of a sudden you need to unload these stocks. But by unloading these stocks, it might drive the values down a little bit, and other people might get nervous. Other investors, they might start getting rid of some of their stocks, and the values may come down. Okay, do you have a responsibility to your fellow investor that's buying the same stocks as you, or do you have a responsibility to your family? Think about that one, because that's more or less what we're doing here. That's more or less what we're talking about. I am not advocating walking away. And I want to say this again, because I know I'm going to get a lot of wrath from people all over the internet, and I get a lot of it already because I tend to talk the way it is. I tend to say things the way it is, and I really speak from the heart. And So I'm not telling you, hey, walk away from mortgage. I'm saying that if it doesn't make sense, and we'll talk a little bit more about that later, I'm just giving you some scenarios and some ideas as to what you should really be considering. But when you get rid of your property, as if you let your property go and it ends up having to go into foreclosure, it's going to hurt your property values. It is. You know, short sale is not going to hurt your credit as much as a foreclosure, but again, those are decisions you need to make, and only a CPA and or an attorney can tell you which is the best for you or give you some good advice. But a lot of homeowners forget that. They forget that fact that, hey, my property values came up dramatically. Why? Because everybody wanted to buy homes in my neighborhood, and guess what? Everybody could buy homes in my neighborhood, and the supply and demand just kind of shot up the property values dramatically. So that's one that I think your neighbor should really consider. And hey, you know what? If your neighbors had a property that's worth $350,000 and it went up to $700,000, and they're still held onto the property, now it's worth $400,000. Hey, if they didn't sell that property when it was worth $700,000, they can't be mad at you. I think that other consequences that you can have should really be determined by your accountant and your attorney and yourself. You should really speak to a good accountant, say, hey, are there any tax consequences in me getting rid of this property or letting the property go? And the attorney, are there any legal consequences of me letting this property go or selling it as a short sale? What should I do? And then you could make a decision that's best for you. You need to make the decision that's best for you. You can't let people bully you and telling you that, hey, you need to keep that property that's worth half of what you owe, because, hey, in 15 years, okay, let's put a scenario here. Let's say that in 15 years, you say, okay, it's time for me to retire. You owe $600,000 today on a property that's worth $300,000. In 15 years, maybe your property will be worth what is owed on it. So basically, when it's time for you to retire, what are you going to have by the way of equity? Nothing. If you're saving money for your kids' college tuition, you're going to pull some of that money from the equity of your property to pay for your kids' college tuition. What are you going to tell your kids in 15 years when you find out that you still owe what the property is worth? So those are things that are really, really important. And you know, and I don't mean to scare people, and I'm not trying to, like, you know, push you into something one way or the other. But what I am trying to do is I'm trying to open up your eyes, because you need to open up your eyes. Too many people are completely in love with the American dream, and really what you're doing more than anything is you don't have a piece of the American dream. You have a piece of the American nightmare right now that exists in this housing market, where properties are worth half of what is owed on these properties. It's not a good thing. And you know, don't let government, don't let lending institutions, don't let your neighbors tell you, no, you got to keep that home. You made a deal. You did make a deal, and you're exercising the latter part of that deal. So I'm available if you want to talk to me. Hey, you know, the spreadsheet that I went over with you earlier, I have it. So if you want, spend about 10-15 minutes with me. I can give you an idea more or less of what it'll take for you to recoup the loss of the value of that property. And it's a really dynamic spreadsheet. Again, I mean, I came up with the spreadsheet in the middle of 2009, and in 2010, experts were saying pretty much the same thing that I had been saying for pretty close to a year. And this spreadsheet really is right on the money. Of course, nobody can predict the future, but it gives you a solid idea. If property values were to go up 2%, 3%, or whatever amount you want to put in there, I'm able to do that spreadsheet for you, and in like 5 to 10 minutes give you a solid understanding of where you are and where you probably could be in 10 to 15 years from now. So if you want more information, I'm always nothing more than a phone call or an email away. My phone number is 1-800-882-7896. That's 1-800-882-7896. My email address is robert@robertaldana.com, and just visit my website at robertaldana.com. Aldana is spelled A-L-D-A-N-A. There's a lot of good information on there. There's other videos on there. I'm putting some resources where you can talk to various different people if you have questions and so forth. And again, myself, as a licensed real estate agent since 1986, I can help you. I can go over a lot of your different scenarios, tell you what makes sense for you, or give you an idea of what makes sense for you. But ultimately, you're going to be the person that makes the final decision. If you're on Facebook, Twitter, or YouTube, follow me at /Robert Aldana. So look forward to seeing you on the web, and look forward to meeting you hopefully in person one day if you have a question. Again, I'm always a phone call or email away. 1-800-882-7896, 1-800-882-7896, or email me, robert@robertaldana.com. Have a super day. Thank you for watching this video, and I hope to be in touch with you. Talk to you soon. Bye-bye.